All right, guys, welcome back to the channel. We've got three big things to cover in today's video. The first being the potential banning of Bitcoin and crypto custody. The second, the end of the Bitcoin cycle. Should this occur, probably not going to be great things for BTC. And the third is, of course, the death of cryptocurrency. And I don't use that term lightly or as clickbait. There is a few people who are getting a little bit triggered, but I guess that is to be expected, especially when you look at things as a death and a rebirth. For whatever reason, they're a little bit fragile in their emotions. So we've got three massive things, as I said, to cover in today's video. First, I just want to say thanks very much for all of your support, especially in these quiet times of the market, smashing up the like button and, of course, subscribing to the channel for our no-nonsense titles and thumbnails. Lots of big warnings and breakings and all this sort of stuff going on out there, but not here, not for now, unless the algorithm wants us to do it again. So first up is the banning of Bitcoin and cryptocurrency custody by financial firms. So if they were going to custody your Bitcoin and crypto, what Joe Biden's administration is saying is that they would veto legislation to allow these financial firms to custody Bitcoin and crypto. This happened just a few hours ago, actually. You got some statements here from the US. It's plastered over X. And of course, it's making the rounds now with the possibility of Joe not winning this next presidency, so on and so forth. Obviously, I'm not a US citizen. But at the end of the day, I don't care about the politics whatsoever. Bitcoin and crypto will do what Bitcoin and crypto do, what they are meant to do, and they'll continue to trade regardless of whichever president gets in at the end of the day. And it also reminds me of the days when China was banning Bitcoin. But this leads to a deeper issue, which potentially happens at the end of the real estate and economic cycle, as my good friends here at Property Share Market Economics have also pointed out. Now, some of you might remember, if you were here last cycle, in 2022, Phil and I did a talk, or mostly Phil doing the talk and me doing the answers here, about the government stealing your crypto after 2026. Just a possibility, as what a similar thing happened with gold nearly 100 years ago. The government came after gold and stole everyone's gold. You can put it whichever way you want, but I think most of us here would agree that essentially they banned holding gold and they stole it from everyone at a price that is just absolutely ridiculous. This might have a 1% chance. I don't know. I'm not the government, but if you're potentially starting to see things like this with, if it even it comes to fruition, that this legislation comes through and then the Biden administration vetoes it. So for financial services or financial firms to custody your Bitcoin and crypto and say, no, it's not happening, no one's allowed to have this. Well, that might start the snowball effect for future bannings in the future. We'll pay a little bit of more attention to this as time progresses, but not to get too worried about this right now. It's just talk at this point in time. Nonetheless, it is still a possibility that the government could ban the holding of Bitcoin and cryptos within financial firms. Of course, this could be seen as a negative for the majority, because that means there would be a loss of access to Bitcoin and crypto for the masses. So that's the first thing covered off. The banning of Bitcoin and crypto custody. More needs to come from this, but that is what the Biden government has said. Now onto the second thing. Second thing we're looking at is the macro analysis, the macro cycle here for BTC, and areas of specific importance when it comes to the price levels here for BTC. As always with social media, whether it's YouTube or X, there's always going to be a number of bearish claims, a number of bullish claims, those that think the market is getting ready to pump from here, and those that think the market is getting ready to collapse and the cycle's all over. I'm in the middle in the sense that I think there is still more time to go here, but I don't think the cycle is over. And with that said, if there is more time here, then I don't think this is getting ready to pump by the end of this week or next week. I don't think we're about to see new all-time highs in such short amount of time. But let's first look at the longer term outlook here. Just looking at the monthly chart here for BTC. I've got the monthly up, I've got our 50% levels, and I've got our swing chart here, so the yellow indicator on the chart. I'm looking at major 50% levels in price. Now I've got the monthly swing here from the low in August to the top in March, and the 50% level's at $49,000. So the main simple thing here that I'm going to look at is if the market, in this case Bitcoin, and this specific analysis can be used across any market. You can use it across stock markets, you can use it across commodities. In this case, I'm using it on BTC. Typically, if you're going to see a test of the 50% level, absolutely fine. Sometimes you'll get a break of the 50%, but a close back above the 50% level on a longer term time frame, like on the monthly chart. And I'll show you in just a minute the example here in 2021. But what you don't want to see is a breakdown of the 50% and then a retest underneath the 50%, because there is a far higher probability that that is going to lead to further downside. All right, so some examples going back to the previous last cycle. Anyway, 2017 cycle leading into that peak. I think Bitcoin is following this cycle most closely now in our current cycle, but that's beside the point right now. We're just looking at the 50% levels and looking at it in relation to our monthly swings. So you've got the move from the low of roughly 150 odd bucks up to $750. This took several months. To be precise, low to this top, about 17 months. Guess what we're in right now? We're in about 17 months from that low in November to where we are now, 18th month. We just finished our 17th month and the top was in the 16th month. So that's where we currently sit. Let's go back to this example here. Now into this top, the correction came almost dead on 50%. The low there was 479. The 50% level was 478. Pretty damn close using a 50% tool. Absolutely phenomenal. So what happened? It tested it, bounced, closed higher. Good signs. Now using the low again, there is your next correction. Didn't get too close to that 50%, which is just showing the sign of strength. And from that point, you can see that the market rallied even harder than what it had done for the first half of the cycle. Basically, this whole period, you can see that it's still trying to climb, but then as you get to the end of the cycle, the angle really does increase quite substantially. So you get to that point, still no correction to the 50% or break underneath the 50%. The next monthly swing top, same deal. The next correction, I'm going to use September here because there was a pretty significant move to the downside. Again, didn't get to the 50%. Now we get to the top of the market. December was a top, January was a correction. January, not the worst thing in the world. It tested the 50% for the first time since the beginning of the cycle. It closed above it, so still looking strong. But the rally in February failed and went underneath the 50% quite substantially, did close above the 50% again. So there was still the possibility that you could see higher prices here, but it had come back a long way compared to anything previously in that cycle. So that's already the first sign of weakness or macro sign of weakness here. There's plenty of signs in the shorter term, but in terms of macro analysis, that is a big key that you're seeing a huge correction. Now, come March, you had a lower top, and then the market closed underneath that 50%. Again, it attempted the 50%, almost dead on that. You can see 9,962, and the 50% was 9,917. So in terms of a percentage, just under 0.5%. So the accuracy of this tool can be quite significant. Moving on from that, you saw the lower swing top hit the 50%, and then the market collapsed from that point. That took another several months for it to end. So now that we're done with that example, with how important you can see this 50% level, let's use it in the next cycle. Now, we hadn't got out of the all-time high yet, and so you're typically going to see bigger pullbacks while the market is still range trading. There's basically trading between a pretty big level here, your single thousands and then all the way up to $13,000, $14,000 again. Going to the next monthly swing top, not much happened here, but again, that was below this, so I'm not looking at that as strongly. The major one I want to look at here is the top here in April. You can see we had a really big run up using the low. The correction that came in did break from the 50% on the daily. There were closes on the 50%, but once we get back to the monthly, we still had closes above the monthly, for the monthly, above the 50% level at $34,000. So it was above it. Sometimes it can be quite close to it, but the main thing here is that we saw a higher low form and then the market charge away from that point. Granted, it only climbed to 70, so basically a doubling and a bit from there for Bitcoin, but nonetheless, the bull market was still on and there was a lot of altcoin gains to be had at that time. So the 50% level holds again. Now we take it to the entire cycle. And we remember what happened back in this cycle here, back in 2017. There was a test, there was a close above it, another test, another close above it, and then it got rejected, close underneath the 50%, and then collapse. So this time, a test of the 50%, a couple of closes above, we had a rally into a lower swing top, came back to the 50%, and was not able to hold on that following month. And then you see the collapse from that point. So a breakdown of the 50% level, a breakdown of the monthly swing bottom, and the rest is history from there. Essentially going into the bear market low. We got into that cycle low from the breaking of the 50%. So now that we understand the importance of the 50% tool on the monthly chart, so basically taking a longer term look here with BTC, we can apply that to this cycle. Now, first up, you might notice that I'm not using the cycle low, but I'm using the higher low before the market broke out. The reason for this is that it allows us to get that closer or slightly closer to the market price should this start to break down. And that price would come out at $49,000. That also lines up with the ETF top that happened in January, and also lines up with the March top, the lower swing top, which is very, very important before Bitcoin collapsed into the major part of the bear market. So you've got a lot of price resistance, which could potentially become support. Now, I'm not for one moment suggesting that it has to get to this price. We're just looking at price targets, or essentially price support. Should this break down, then you could potentially consider that the cycle is over. Now we have one more price target to look at. Take the 50% all the way back to the cycle low. So we have the current cycle top and the cycle low. That price is at 44,600. Again, you could see through December and through January that although it did break past that price point there, roughly 44K, 44 and a half, the closes were underneath that. So this area of mid to high 40s would be a very critical level. If Bitcoin was to break down from that, you would then consider that the cycle would be over. Now we're looking at macro ranges here, which would seem ridiculous because that's a long way from where the current price is. It's about a 30% move to the downside from where we are. And most would say, well, that's too far away. I need to get out well before then. That's true. But then you run the risk of the possibility of the market bouncing and then coming back from those levels. So that is also a possibility. That's the difference when it comes to using macro analysis or short term. If you start to use too short of a time frame, then you run the risk of having to get in and out all the time. It's entirely up to the individual trader or investor. There's no right or wrong. You just choose what works best for you. On the flip side to that, which can be very, very helpful to save you money, is if this is to break down from those levels, use this one very wisely and have a plan to get back in, of course. If it is to break down from that, then you could potentially consider that this is not a great buy the dip opportunity. Potentially consider that that is not a great buy the dip opportunity. I'm repeating it because typically what happens when you get to those points, like what happened in the previous cycles, essentially you've got the idea that this is the best time to buy the dip because it's the cheapest it's been. It's now 30K, 35, 40K, and it was 74. But of course, if that is to occur, then that would mean that breaking the 50%, at least according to the rules, it means that there is a high probability, not a guarantee, but a high probability that that move is over and that you have to wait for the next reaccumulation wherever that might be, which could mean that it has to go lower again, consolidate, and then push higher. That is a worst case scenario. That's the idea. That's what I put in the title. This is the worst case. I don't think that is going to happen at this stage because we don't have any signs that it's going to happen. But nonetheless, you have to be prepared for anything like that. Now, let's move back to something more positive, let's say, and we just look at this 50% level, roughly 50K. There is all the chance that Bitcoin still tests 50, bounces back, and then gives us another fresh high. I think that's a far higher probability that we are either at the low at 56K or there's not much more to go in it, between that sort of high 40s, low 50s area. I don't know if it's going to get there. There hasn't been enough signs to say that. Of course, if we were to break down from the shorter term, here we are. We're sitting at the 50% level now. You can see that support on the short term, a breakdown of that, and then you sort of get back to 59K. Well, then you've probably got a better chance of hitting those low to mid 50s. But for now, there's no sign of that. So for now, 56.5K is the low. So I'm a macro bull. I think this cycle's still got further to go. The beauty about where we currently sit is that there is time for consolidation and then a retest of those higher prices later in the year. So until that breakdown occurs, I'm not worried. I'm not worried about any sort of candlestick signals. I'm not worried about any of these other signals that potentially come up around the traps, around YouTube, around X. This is the style of analysis that I use. I don't look at other styles of analysis. I want to focus on my craft. My craft is using Gann analysis. Once you start to bring in too many different types of analysis, this guy said this chart said this, then it becomes really confusing because you don't understand the probabilities of those charts playing out. Say you've got a candlestick here, a doji at the top. The probabilities of that happening might be quite low considering where we are in the cycle. It might just be enough to pause the trend and you start to see it correct at this point and then come back from there. So that's my belief, why I think it's so important to focus on one of your skills or focus on your own craft. For me, the craft is understanding Gann analysis and macro cycles. Now, I was hoping to keep this video under 20 minutes, so I'm going to come back to this in greater detail in future videos. And this is looking at the time frames underneath the old all-time high, especially after our 3 days down signal. Now, you might recall that I've had many, we've got a few rules here that we've been looking at, especially a few of those bearish signals that came in through the tops, the 3 days down, the 3 weeks down. If you're just joining, great. Hit the subscribe button, like the content. Again, home of macro cycle analysis. The main thing I wanted to bring up from here and what I've been looking at for 2024, to boil it down, two major things. A top in Q1, and I think for the S&P, we got it on April 1st, so spare me a day if you don't mind. The hype just got too extreme for Bitcoin. So that's been a big one. The second major thing was the correction might last longer than most expect, but I'm of the view that this is potentially a wave 4. So here we go. This way. No, I forget. Anyway, coming down, things mirrored, coming down into wave 4 before we take off to wave 5. And I think this period, this Q2, Q3 of 2024 is that fantastic altcoin opportunity. Now that we're getting through that death of the cryptos, the death of the cycle, the rebirth comes. I don't know what you guys believe in out there, whether you do or you don't. I'm not a Christian or a Catholic follower, but you've got the rebirth and the death of everything in life. We just had Easter anyway, I won't swear at the back of that one, but essentially you have the death, then you have the rebirth. And the triggeredness that came up from yesterday's video with the death of crypto, it blows my mind. I don't even know if half the people watching are male adults, but the triggering of some few words in the titles is far beyond me. You got death and rebirth. It happens in every single thing in life. It's the whole point of the seasons. You have the death of summer leading into winter, and then the rebirth into spring and so on. That's the point. So yeah, it's probably a handful of people that are triggered by titles there. Nonetheless, Bitcoin, looking at the timeframes underneath the all-time high, after that particular signal, our 3 days down, I'm looking at this sort of 13 weeks now. So this is what we had posted many months ago, looking at the timeframes here. So 3 days down signal, shortest timeframes for this. We've now gone past that from the March 14th. And the next median time frames in months was roughly 4 to 6 months underneath the old all-time high. I don't make the rules. I just follow the rules. So I don't make the rules. I just follow these rules, right? And the history shows, let's get to Bitcoin again, that each of these times you can see underneath these 3 days down and other things that we'll get into in other videos is that you've got a simple 27 weeks underneath that particular top, 3 days down, halving happened, and then it starts to break out into fresh highs again. Not all-time highs, I'm talking fresh highs here. 27 weeks, that's basically 6 months. So if we want to take it down into 4 months, you can see there 16 weeks, we hit a new got close to an all-time high, there was some corrections, and then it took a while until it started to go again, roughly 16 weeks. The 3 days down signal. So this one here I don't believe had the signal, but anyway, the signal here, we're just looking at those resistance and how long it takes to get back to fresh highs. 29 weeks. We can go back. 27 weeks, that's 6 months. Back here, that's about 5 months. Halving also happened in here. So long story short, that's why I'm still looking at these particular timeframes of being roughly that sort of 4 to 6 months. 4 to 6 months, not has to be 6 months, but in that time frame. So as we get to 13 weeks, that's been some of the shortest time frames of these consolidations as well. There was a halving back here. that would lead us out into sometime in June to break into fresh highs. I think that'd probably be somewhere around the best case scenario. We'll continue to follow up. I want to get into altcoins and the old death of crypto here in just a second. But yeah, hit the subscribe. So I'm going to continue up on this in future videos as we continue to follow the dying out phase for Bitcoin until we get the rebirth again. I can't believe it was such a difficult concept to swallow for, I guess, the select few, as we can see from the like and dislike ratios. Moving on now, total cryptocurrency market cap, 4 weeks down. You can see that it's still grinding out now, lower highs, higher lows. Not a bad sign. In the short term, it's underneath the 50%, which is not what we want to see. It'd be nicer if it was above. However, it definitely is still above the major 50%. So that's the most important right now. This low to this high, cut through the middle. I'll take it off logarithmic and you can see the linear scale here. So provided we remain above that sort of 420 billion on the total cryptocurrency market cap, excluding Bitcoin, ETH, and stables. Note that this is a custom indicator that we have a TIA. You can check these boxes, you can add them back again. It all depends on how you want to view the market. The link to that is in the top of the video description. So over to the total cryptocurrency market cap. It's sitting at, looking at the top to where we currently are, about 56 days from the all-time high. So getting close to that 2 months. The 3 months again takes us out to about June. And while we're in this period, that's where we can expect that old feeling of death. It's basically clearing out the dead and the new are coming through again. And I think most of us would agree that we would definitely see new cryptos coming through in this next stage of the cycle. And in the previous move to the upside, we're definitely going to see cryptos that die out. Unfortunately, for those that are emotionally attached, maybe they hit their crypto and they got married to them and they are just now hoping for the best. That's not going to work out so well for some people. We've looked at some altcoins here, which might not work out so well. And some of them have made it to my dead list. Your list might be different, but there are a lot of dead cryptos now from previous cycles, and some of them have had to add in from this cycle because they're just not showing that strength that you want to see moving forward. Interesting, we have seen Solana test, come back under, but still putting in higher lows, so it could potentially be part of the strong again. But what we are seeing today is render. I know I talk about render often, but it's find it in whatever chart you want. It's the pattern that you're worried about. Forget the name up here. Let's say it's not named. Okay, I'll try and block that out as best as possible. The strength, the push, the breaking of the highs, the breaking of the 50%, the test of the 50% on the upper side here. And today, at least, it's tried again to push higher. When Bitcoin came back down to 61K, yeah, it just broke under that. And many other altcoins are just not showing their strength against BTC either. So in terms of a chart pattern, this is what you want to look for. Forget the name of it. If you're tied to your coins, that's your problem. I don't care. But if you are fluid in how you move about the cycle and you're not sucked into any particular one, then you're going to do a lot better. It's just that simple. So just playing a few games here with these schematics, looking at previous cycles. So 4 years ago, we've got this particular schematic. Now I picked this up from the past, from the second half of 2020, and then projected it to where we are today. So just using this here over the log scale, you can see it's done a similar-ish sort of pattern. I'm not saying this has to play out exactly, but it's done similar things in the past, and that period was definitely a death of cryptocurrency. It was very, very quiet. That's very similar to what we're seeing in today's market, especially when it comes to the new investors, the new traders coming into the market. They're searching on YouTube or X. That has definitely dropped off compared to where we were just, say, 3-4 months ago, back in December, January, and February of this year. And so just using that schematic, I mean, I don't know if it's going to play out exactly the same. Looks pretty interesting. We'll keep it there. Continue to follow up with it. I posted it on X as well. Join us over on X. I'm going to be posting a bit more on there, especially when these times are a bit quiet. Other than that, appreciate your support. Hit that like button. Subscribe to the channel. Links in the video description for TIA Premium. I'll see you guys back here for another video. And yeah, don't let this thing get you down. It looks like we are in that wave 4. And we've got some bigger things to come. I think there is some massive potential and some massive opportunities ahead, especially with the rest of the 18.6 year cycle to go. Thanks again, guys. See you at the next one. Take care and peace out.